value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
The action on the equity markets catching your eye. Is there anything interesting going on, or is it just slowly bouncing back and forth, not really going anywhere?
Well, it does really seem to be the latter, and I think it's important to understand why, because we had a tremendous rally since March up to Labor Day. The S&P 500 went up just about 65%, and it was very unlikely that it was going to go up another 65% in another 5 or 6 months straight up. I mean, the market's never done anything like that before. So that upward momentum stalled out just around Labor Day, and the S&P 500 fell about 10%, and now it's bouncing off of that low. But I think the implications of a market that goes up 65%, and then makes a little peak is that you're now in a sideways to down trend. And in the past, we've seen that many times. For instance, in 2009, the stock market had a bear market low that March and a tremendous rally in just a few months, and then went sideways for just almost the rest of the year. In 2004, something like that happened. And in fact, with gold, which I know a lot of your listeners follow, and I do too, gold and the mining stocks in 2016, they made major bottoms and had a huge rally off of a low and then went sideways for quite a long time after that. So I think some sort of sideways to down trend is going to play out with the stock market now for probably at least the rest of the year. And we're just not in that type of market anymore where everything is going to be going straight up, week after week. And a lot of people aren't used to that. Many people started trading for the very first time just a few months ago. They got Robinhood accounts and so forth in the United States, and they were experiencing a straight up market, and now we're in a different market environment. So it's going to be interesting to see how quickly new people adapt to what's happening. But I think it's going to be very difficult to trade the stock market averages themselves, because when you're in a sideways up and down pattern, it's so easy to get fooled and shaken out of things.
The Robin Hooders, the ones who just started training when they got their emergency relief checks, it seems, for some of them, are they in for a nasty surprise when the market doesn't go up 5 or 10% in a week?
Well, I think so. And one thing that has happened, I know for a while, we would together, I would tell you about these Robinhood stocks, that were the most popular and widely owned. Robinhood was ranking that information, 100, here's 100 stocks, and we're ranking them by the number of people own them. They'd even tell you the exact number of people in the stocks, in any stock. And then they took that information away a few months ago. I think they're getting bad publicity, but they've just brought it back, in a new version. They no longer show you the exact number of people in a stock, but they do rank the top 100. And and there's a lot of stocks on this list, which I don't think are going to do anything. For instance, Tesla is number 2, the second most widely owned stock. Carnival is in the top 10. GoPro's on the list. Not every stock is what I would say bad, but there is certainly a lot of them. And these were stocks that were going straight up at one point, and they no longer are. So I think those are situations where a lot of tough lessons will be learned, but that's what trading is when you start out. Most people get into something going straight up, and then once they lose a little bit or a lot, they figure out, I gotta learn how to get good entry points or buy real stocks that aren't just all hype, because a lot of stuff in the market is hype or just craziness. For example, one other stock on the list is Dave & Buster's. The symbol is play, and this company went from $50 to below $5 in March, a complete crash, and became one of the most popular stocks to buy when it went from $5 to $20 off the March low, and that attracted a lot of buyers, but the company's going bankrupt. So it's not a good investment, but that kind of price action drove people into it. It reminds me very much of the cryptocurrencies a couple years ago. People were diving into them, even though there's no earnings, they don't represent ownership in a company or anything, and people are buying them simply, I think, because of the fact that they were moving a lot in a short amount of time.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, what kind of action are you seeing in gold?
Well, sort of like the stock market, gold had a nice run from March to early August. And one important thing people need to understand when it comes to gold is for the past several years, gold and silver also have been outperforming the stock market, going up more than the stock market and falling less. So when the market crashed in March, the S&P 500 fell 35%, but the price of gold only fell 10%, and then gold made a new 52-week high before the S&P 500 did. And now gold has been in a consolidation since early August, when it got near 2100, and last month it fell to roughly 1850. But I think it's likely to break out sometime in the coming weeks and have another run up. I don't think gold is in a trend that could go sideways for as long as the stock market does now. And one reason why is perhaps the most remarkable thing that has happened over the past couple of weeks is that while the stock market fell 10% in September, U.S. Treasury bonds went down too. The TLT ETF hit 175 in early August, and now it's below 160. So it's been falling. That tracks the 20-year Treasury bond, and it has fallen when the stock market has fallen 10%. Well, historically, bonds go up when the stock market drops, and all Americans are taught and told that if you want to be a well-diversified, safe investor, put, like, say, half your money in stocks and half your money in bonds, because when stocks go down, bonds go up and rebalance your account once a year or some, time interval. Well, that strategy is in big trouble, because if bonds go down when stocks go down, how do you diversify when everything you own goes down in value? And the reason this is happening is bonds trade opposite in value to interest rates. When rates go down, the value of bonds go up. Well, rates are near zero. And so they really can't go up anymore in a meaningful way. So the risks are to the downside. At best, you throw money in bonds and you don't lose anything, but they don't provide the upside protection anymore. And I think this, of everything, I'm talking about with you today, is the most important takeaway, the most important thing people have got to understand is happening, because this has ramifications for years, and not just for a trader or someone getting a Robinhood account or day trading, but for everyone in the markets, people who think that they're safely invested in retirement. Because if bonds don't provide safety anymore, and I don't think they do, this is a big thing people need to adjust to. Now, this is why I think gold and silver are in such a great position over the next couple of years, because they are the alternative to the bond market, and they've been outperforming bonds year to date as proof of that. So even though, gold has dipped since August and isn't just going crazy today, I know most people only want to get into things when they see them go straight up. But now is, I think, a good investment time. It's kind of a sleepy time for gold and silver and mining stocks, and that's when I like to get in. But it's a very interesting thing that's happened with the bond market.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, are low interest rates putting pressure on the U.S. dollar?
Well, they are. The dollar is trading down since it peaked out in March. It was an unusual move in March because of what was the financial collapse that was going on. When the stock market fell 35%, there was also trouble in the corporate bond market. But ever since then, the U.S. dollar index, which measures it against a basket of currencies, has been going down. It had its biggest drop in July in over 25 years on a percentage basis for 1 month. But since then, it's been going sideways. I think it's going to go down again, but it's sort of like the price of gold and silver going sideways since August. And when it starts to go lower, I do think we're going to see gold and silver break out. Now, what impacts the U.S. dollar index, I think, is the need for the government to keep rates low. And the real problem is going to be if bonds continue to weaken, or the U.S. government keeps creating these stimulus bills, creates these continuous budgets over the next couple of years of huge deficits. That's what will weaken the dollar even more. So I really believe we're in a bear market for the U.S. dollar, just in a pause in that trend. But the dollar is trading below the 150-day moving average, below the 200-day moving average also. And if you look at several major currencies, such as the Swiss franc, they're all consolidating below highs last seen in 2015. So I don't think, the dollar is going to dump this week, but it's certainly before the end of this year is likely to, start another leg down.
What's going on with crude?
Well, crude is something that we all know is going to be a great opportunity to buy energy stocks because so many of them pay big dividends. And I'll confess, I tried to take a stab at buying some earlier this year and then got stopped out. And I did it a little bit, not just, a small position. I think it was in August and got stopped out again. So that's the lure of energy stocks. If you get the bottom, you're going to get big dividends, and they've been in a bear market now for years. So a bottom will come, but unfortunately I have seen, no sign that we're really at it. It looks to me like the price of oil is going to continue to trade sideways and probably isn't going to really pick up until the U.S. economy and the global economy really starts to grow in a meaningful way. We're still in a deep recession or depression, whatever you want to call it, and it's not likely to end this year. What I'm watching, though, with the energy stocks at this point is if we do see more weakness in the stock market, another 10% drop or even 20%, whatever the case, at some point, going forward here, I want to see how the energy stocks act, because if a sector holds up, when the stock market declines, it typically then leads and performs better. And that holding up while the market declines creates sort of a safe entry point too. In fact, that's what happened to gold. Gold fell 10% when the S&P 500 fell 35%. So if at some point, whenever the next 10% or 20% decline in the stock market takes place, I'm going to be watching energy stocks very closely, because if they don't fall as much as the market, if they perform better, just like gold did in March, I'll then be a big buyer. But at this point, I'm just watching. I took a stab earlier this year, a little bit in August, and now I've sort of, it's not just energy stocks, but just about everything. I just think it's time to be just a little bit cautious. And, we're not in a market that's screaming up and up and up like it was, into Labor Day. It's going to have its up and down days. So that's, I think, a time to be a little bit patient, unless you really see an exceptional situation with a individual stock or, something a little bit unusual.
Is Tesla going to still be a darling of stock investors, even though the company has never made a penny?
Well, it's the second most popular stock on Robinhood, so it is. But I think that will come to an end whenever it has a year in which it's down dramatically, and I think that will happen. Aurora Cannabis was a darling of stock investors for 2 years. It was the number one owned stock on Ameritrade last year, and because it went up and was one of the best stocks in 2018. Now it's one of the worst stocks. So I think at some point that's what's going to happen with Tesla. But obviously that's not happening today, but it went to $500, and it's, at some point it's going to have a failed rally, and that'll be time to get out, I believe. Now, it's not the only stock. We've seen this, Nikola Corporation. It was $10 in March and went all the way up to 95 by June, and it's crashed. And it's one of these electric car companies. So I think it's a very risky sector, and the action in that stock shows it. So I know that makes a lot of Tesla fans angry, and I'm not someone shorting it, so anyone out there that likes Tesla, don't think that. But I just think there's better investment opportunities out there, if you want to look at earnings and what you're paying for them, or if you want to look at sectors that are more than just one wonder stock too.
I've heard some describe Nikola as almost a scam stock.
Well, a report came out suggesting that is definitely the case, and the SEC opened up an investigation into them, and then the CEO resigned. So, it very well could be.
Are you taking special interest in high-tech stocks, especially ones that might be related to the virus crisis?
Well, I'm not personally, because I'm not an expert on which of these drug companies and so forth have the best chance to develop the vaccine. So I'm just content to watch it and just hope someone develops something. But if I was to trade it, the way I would do it is buy like 12 of these stocks, just pick them out, and then when one of the companies does find a vaccine, just sell all of them. Because markets tend to trade on a buy the rumor, sell the news type situation. So that's what I would expect is going to happen.
Mike, how would you sum up what's happening in the markets right now? Keep a close eye on individual stocks instead of the overall market?
Yeah, that's definitely what I think is the easiest thing to do. I mean, the stock market averages are in a range going up and down, let's say 10%. And that's very tricky because you get excited when it goes up and then you buy, and then if it goes down for a week, it's easy to think everything's going to crash, and then you try to short it and it doesn't. And so it just kind of churns money over among people trying to trade it. So definitely think the thing to do is stick with stock patterns that are really coming out of consolidations and more bullish, and not look at just daily price action on the indices.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.